Going on my third recording. It's because I'm still trying to get used to this. So we've got July 1st, right? Or July 2nd. So we're at the first of the month. We are at the first of a new quarter. And we're at the first of a new half. What does that mean? No, it's just day after day, different things, just how people calculate things in their world, especially when we're talking about, fiscal financial stuff. We're also talking about tax stuff. It's and goals and things for businesses. So for you as the real estate investor, same day as yesterday, what's happening in the market? Are there deals out there? So the two questions that we're going to tackle today is, are there deals out there? What kind of deals are out there? How do I find them? And kind of do I have to immerse my entire life into this? And how much do I have to invest to go find these deals? Because if a person's hunting for like the greatest thing out there, you're going to have to make that your freaking life. So if you have a day-to-day job that's providing a living for you and providing an opportunity to be a real estate investor, do you want to sacrifice that to go out and hunt that specific deal? Spend hours upon hours upon hours, or you can just invest your time in what's generating revenue for it. I had a mentor tell me one time, stick with what got you there, and then use that excess to go invest. But you have to employ other people to help you invest, right? That means you may not get the one-off situation that they spend time doing because that's their profession. So let's talk about some deals that you can get out there that are actually plentiful. But I'm going to take this thing over to Texas because I've got one sitting in front of me that we'll just talk about and I'll share it with you. I'm going to have to get my glasses on to be able to read this subbitch because 50, I'm on my 52nd turn around the planet. And because of that, these are fading a bit when it comes to distance. I can read up close. Awesome. So here's what we're looking at. Looking at Crandall, Texas. Might as well be Dallas, right? Dallas, you're looking at a property, brand new built property right now. It's got a $277,000 value, but for a limited few of them, they will let you jump in there at $234,984. Now, that's an interesting number that came up, but it was based on a percentage. Now, if you're coming this at 25% down, this is what they're presenting. A 25% down deal, that means you're going to come in with a down payment of $58,746, which gets you a loan amount of $176,238. Now, the other people that are buying out there, which is not you, because if you come through this source I'll connect you with, they would pay retail $277,000. That $277,000 putting 25% down is $69,250. That's a $10,500 plus for you. That's that swing that is in the green. If you look way over here, swing in the green right now, 10,504 in your benefit. Now, what does that do for you? You've got a lower loan size, 176,238 versus 207,000. That's a benefit because you're putting less out of your pocket. Less invested means higher return. Well, if you take the loan amount and you have your tenants paying it off, which is what the goal is, have the tenant paying off the loan, keeping something reasonably rented the entire time you own it, what are they giving you? Well, they're paying off 176,238 over 30 years. And I caution you, don't get caught up in doing that crap. You try and pay it off early. Just pay the damn loan, keep your cash flow, use that to be able to deal with vacancies and other things. Don't pay down your mortgage. So that means they're going to give you, amortized over 30 years, $5,875 per year, averaged over 30 years to pay down that loan. Well, you divide that into your down payment plus cost, your down payment of $58,000 plus, let's say, $7,300 cost, you're all in at $66,055. That's an 8.89% return on investment. Not bad, because you're putting 25% down. That's why, putting 20% down, you're going to see it crack double digits. But we're going to say this is 25% down because that's what they're presenting. Now, let's say your property appreciates only 2% per year. That's it, 2% per year. What is 2% of that $277,000? That's $5,540 per year. That's equivalent to another 8.39% on your invested capital of $6,600. Then let's say we got our principal and interest at today's rates. You can use your $10,000 to buy down the rate too, because you're saving 10 grand. But let's just talk about it as it's going apples to apples. So you're going to end up with $1,157 in principal and interest, $114 in monthly insurance, $700 in taxes, guys. This is Texas. So you switch that E and that A around, you can spell Texas with taxes and it's evident right there, $706, right? So now you're at $1,978 principal, interest, taxes, and insurance. Gross rents are $2,200. That's why the gross rents are so high on this, because it's Texas, right? So now look at your monthly capital that goes into your contingency account, $296. That's a 5.38% growth on what you invested in the property. So you add it all together, you're 22.66%. Now, let's look at the average retail person's doing. $277,000 price, 25% down for them is $69,000. All in there, $76,000. Again, $10,504 more than you. Well, you look at their amortization. Well, they're amortizing a bigger amount, right? So that's $6,295, which is equivalent to 9.05%, because you guys' costs are exactly the same, even though your amount is lower in your actual down payment. But higher amortization means you're at 9.05%, so it's a 0.15% different than you. Not a big damn deal, right? Appreciation, same 2%. That's 7.24 based upon what they invested. That's a 1.15% improvement that you have. So really, you're up 1% on them in total revenue, and you're 10,000 less in total cost. Not bad. So then you look at the principal, interest, taxes, and insurance. You've got your total gross rents are the same. Principal interest is higher, so they're only making $89 a month. You're at $296. They're at $89. There's another big move there. So that's 1.4%. I mean, that's a 3.98% difference. Their total revenue, 17.68%. When you look at those numbers versus your 22, not a bad situation. Having a hard time thinking that's rough, right? So now let's go into what's going on in the market. So what has happened into the mortgage-backed securities? Everybody's saying, what's going on with interest rates? Why are interest rates going up? Now I'm trying to find my spot here. I got to look at my screen because ultimately, guys, it's over there. So that's why I got to be able to look here to get the share screen on. So what's going on in the market today? Well, let's talk a little bit about what we're tracking to begin with. We're tracking mortgage-backed securities. This specific one is the Fannie Mae 5.5 coupon. I know others are looking at the 5.0, but I'm looking at the 5.5. They're very closely correlated, and it tells me a lot of information about what's going on because I have the data on what was happening with the value of the security back when they started doing quantitative easing. So we're going to stare at each one of these items here. I'm going to zoom in a bit too. These candlesticks. Now, what are we looking at here? Every single one of these represents a day's trading. So let's just look at this particular day here. This is January 17th. The day opened here. This is when the bond traders started trading, was right at that level. That price point right there was 100.43, so par 43. It traded all the way up to par 55, which is our barrier, right? That barrier is based upon when they had the value of the security the day they started the day they announced quantitative easing. Hit that barrier, which I've been drawing that barrier for 3-4 years now. Actually been 4 freaking years. Reversed off of that barrier, and it went all the way down to another support went deeper into previous other trading territory, another channel, all the way down to 99.797, and it stopped trading right around our other floor that we had created, which was par 08. We're right around par, right? It's just a little above par, so par 08. What I mean by par is that's you can see here, you got 100, anything below 100 is subpar, anything above 100 is above par. So where are we at right now today? So what we've seen is the big movements that have occurred. One, we got barely above that value that we had, which was created by the day they announced quantitative easing, which is the end of November 2008. We stayed above it for 2 days, and what did we do? Went right below it. Why? Because you had a lot of traders that were reconciling for their quarter and their half. In that reconciliation, huge movement. Well, because of that huge movement and that reconciliation, the bond market responded, started lower. Like, oh man, we may not have that value there, but it stopped on this floor that we had shown from the past. And it's now open quite well today because the jobs reports are coming out saying that the jobs are actually worse, meaning their economy is not as strong as they had thought the day before. So because of that, inflation may cool a little bit, because the jobs have been hit a bit. So when inflation cools, that means money is not losing its value as rapidly according to what they're looking at, and they believe people will go into bonds, more long-term instruments, which is why we see the bond improve. When that improves, we see a slight improvement in the interest rates. Now, we also know it takes a day or two for that to settle into market. Just because you have a movement in one day doesn't mean they're going to accept that. They accept the negative much faster than they accept the positive, because this thing flips on a dime quite often, driving day traders nuts, of course. I know people look for fundamentals, and like I have all these lines drawn out, they look for these points. Okay, when it breaks this point, I know I can sell or buy or whichever. That's what traders are doing. Me, I think the only ones that are really, really solid points are ones that I pointed out with that item where I've got that ceiling at par 55, but the day they announced quantitative easing proves to me that every time we hit that and it backs off of it, the only time I've seen it get above it is when they start really, really talking about quantitative easing. And then we get to the next level above that would be because they're actually doing quantitative easing. And I don't see that happening right away. That being the case, I think we're kind of at the peak of where our rate might be for the next little while until we have really, really big news come in. So if you're thinking, man, when's the right time to lock? I personally would be doing it now. But also, I've talked to a lot of you who say, I just lock when the deal is ready to go. It either the deal works at the rates at that time or they don't. It's not a matter of timing the rates because deals come and go with the market. When a deal comes in, does it pencil like this one? Does it put you in a positive position or does it not? Brand new home in Crandall, Texas. You're going to have probably a better tenant. Are they going to pay it off? Are they going to stay in there for a reasonable amount of time? It's up to you. But guys, this is just a trade. You're trading somebody's long-term capital for your long-term asset. And you're giving them back long-term capital that loses value while your asset appreciates. You're the winner in the deal. So you just have to decide if you want to get in the trade or you want to just keep jerking off. Talk to you guys on Tuesday, because tomorrow we are closed for the 4th of July holiday. Have a kick-ass 4th of July. Remember where you came from. Remember that none of this is free. Freedom that we do have, somebody paid for. We're letting it slip, honestly. You might want to start waking up to what's going on out there. We're slipping in what we have the ability to do as individuals, and your ability to grow your portfolio. Keep growing it, because the one way to fight it back is to own assets. That's one way to fight back. There's going to be others, but that's one of the ways you can do it now because that's what we're talking about. Have a great weekend.